world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stennebeck. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance. We got a big program coming up on Bloomberg Crypto over the next hour. But let's take a look at where things stand when it comes to Bitcoin. It's hovering around $70,000 per Bitcoin. Really a risk on geopolitical uncertainty that we've seen over the last couple of days. Analysts say, though, that the only way to see improved risk sentiment will be in de-escalation of the Middle East. You can see over the last 8 days what's happened. We had a peak of over $75,000 per Bitcoin. That was back here last week. Fell a little bit just a few days ago. Over the weekend, it fell. And then yesterday, that risk on sentiment where we saw the rally in equities, a decline in oil prices, saw some buying. Now down just about 5% over the last 8 days. Scarlett, trading around just shy of $70,000 per Bitcoin.
And you know, Tim, the context here is that in the early days of the Iran war, there was some hope that Bitcoin could hold up better than other assets. But as this conflict extends into a fourth week, it looks like Bitcoin is falling and failing its latest safe haven test. So what these bars show are the correlations between different assets. There's an inverse relationship between, say, the Swissien gold with the S&P 500. But you look at this bar at the bottom here, Bitcoin versus the S&P 500, and it shows Bitcoin's positive correlation with U.S. stocks. So as U.S. stocks sell off, Bitcoin is selling off as well, as opposed to offsetting that decline. Now, last week, BitGo co-founder and CEO Mike Belshe spoke about how crypto trades during a time of crisis.
Bitcoin has established itself as a global liquidity venue. If you need liquidity, you can go to Bitcoin at size, 24 hours a day, 7 days a week, pretty much anywhere in the planet. And so it's often one of the first things that will be used to get liquidity when it's needed, whether that's short or medium terms.
For more on the price action and what Bitcoin does during times of crisis and what we're learning, we're joined by Dushyant Sharawat, a senior market structure analyst at Bloomberg Intelligence. He's reported on Bitcoin's role as a safe haven asset. D, good to have you on the program. We're all trying to make sense of what Bitcoin does in a time of geopolitical uncertainty. Still relatively short track record. Is it fair to call it a safe haven asset?
Well, it was a safe haven asset, a couple of years ago. And I think the evolution of Bitcoin first being considered as unit of account, store of value, safe haven asset. But clearly, if you look at the higher correlations, as you were showing in the chart, actually, Scott, as you were showing, that used to be that Bitcoin was negatively correlated to the S&P 500. But increasingly, last 12 months, it's actually gone up to 0.56, even up to 0.6. So I think the fact that it's become more of a risk-on trade or risk-off trade. And I think the evolution has been that, as institutions have become more involved in crypto, ironically, the institutional involvement through the ETFs mean that, Bitcoin is increasingly held in diversified portfolios. So you tend to, when it's risk off, you're selling all assets, right? As Mike Belshe from BitGo was talking about in that clip. So it's increasingly becoming less of a safe haven asset, purely as a highly correlated asset with the S&P 500.
Yeah, and that chart really shows how much that has changed over the last 10 years or so. What role is crypto playing in this war in the Middle East? I'm wondering how it's being used, how are stablecoins being used?
Yeah, great question, Scarlett. So actually, we're doing a lot of work around that. And it's in a way, think about the fact that how, today when we say crypto, increasingly people don't only think about Bitcoin and tokens, right? People have a broader understanding about everything that's on-chain, including stablecoins. 12 months ago, if you said crypto, they'd be like, you're talking about Bitcoin, right? Now there's a realization that crypto tokens were the first utilization of the blockchain stack, but there are many other utilizations as well around stablecoins and tokenization. So about the Middle East, actually, if you look at the actions of various countries like Iran, for example, last 5 years, they've been using Bitcoin mining as a way to get around sanctions. So they almost hit about 6 to 8% of global mining. If you look at chain analysis and Chainlink's data, was related to global mining. About 6 to 8% of that was Iran, and almost about 70% of the Iranian miners were owned by the IRGC. So they were using mining as a way of getting around sanctions for a while, right? So there are countries like that. There are countries like Russia that have used stablecoins and crypto tokens as a way to get around sanctions. But on the flip side, there have been countries like Lebanon, which unfortunately is caught up in this war, decimated. GDP is down 40%, 300 or so banks are closed. I mean, forget about you cannot find a teller. The whole building is being blown out, right? So in that environment, we are seeing people, Lebanese citizens, paying for groceries with stablecoins, with USDT on Tron. So it's basically an example of where traditional banking and payments fail. You can have Lebanese foreign immigrants sending remittances back in stablecoins.
In your view, is that an inflection point, at least in some societies, when it comes to this technology? Is it this conflict that will lead to widespread adoption?
I don't know if it's the conflict itself is going to precipitate an adoption, Tim. This was already happening in many other countries, right? So till now, we have not seen massive adoption of stablecoins in developed countries because the marginal benefit of stablecoins compared to the traditional currency was not all that big.
Like, why am I going to use a stablecoin to pay Scarlett when I can Venmo her?
If you can Venmo her in dollars, that's the critical amount, right?
Yeah.
So if you're storing money
within borders.
So if you've got real purchasing power of your currency, happens to be a stable currency, no problem. But if you're in Turkish lira, if you're in Argentinian peso, if you're in the Russian ruble, any of these currencies that saw massive Pakistani rupee, right? You go on. Lebanese pound depreciated about 90% over the last couple of years. Iranian rial is down 99.4% over the last 4 years. So if you're on those developing countries or you're in a war-torn country where your currency is depreciating massively, people held on to crypto. But increasingly, even in developed markets like the US, we've been seeing massive adoption of stablecoins for all kinds of reasons. But yes, the Mideast war could precipitate the next growth leg for the stablecoin sector.
Do you see any evidence that stablecoins are being used more frequently in those pedestrian exchanges inside the US, not just in countries like Lebanon, which are being much more affected by the conflict?
No, not really, Scarlett. Basically, the biggest adoption has been around remittances, cross-border transfers, beginning to see transfer pricing. So Fortune 500 companies like McDonald's deployed across 150 countries, increasingly use stablecoins as a way to get around, all the cross-currency translation they need to do. Yeah. But we're not seeing that as a way, we're not going to a restaurant paying in USDC.
He's still paying me through Venmo.
After every show for all the help. That's what I do. Johann Bloomberg Intelligence. He covers market structure. Always good to have you. Well, this is your first time, so it's great to have you on the program, and we hope to see you once again soon.
Thank you very much, Tim.
Coming up, we're going to speak with Johann Kerbrat of RobinHood on its recently launched platform to accelerate its push into tokenization. And remember, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
It's time for a token moment where we look at the efforts to tokenize different parts of the market. As public equities become tokenized, markets like Robinhood have become increasingly involved in that transformation. Joining us now is Johann Kerbrat. He is Senior Vice President and General Manager of Crypto at Robinhood. So he covers quite a bit of ground here. Johann, good to see you here at Bloomberg. Thank you for joining us today. Give us the state of play here in terms of the tokenized equities drive. Where is it at? And I know in Europe it's really taken off, but just kind of give us a status report.
Yeah, in Europe it's been great. We went from 200 stock tokens to 2,000, and so we see a lot of excitement around the fact that it's not just a few that you can actually purchase anymore. It's actually the entire market that is coming more and more on-chain. I think in the US we're still waiting a bit on the Clarity Act to really push forward. But the latest we hear there is that there's still excitement and there is a lot of chance for this bill to go through.
Yeah, I mean, excitement. I was down in Boca at the FIA Cleared Global Markets Conference, and tokenization and prediction markets were pretty much all anyone was talking about. But it seemed like with the tokenization side of things, there are so many players involved that need to essentially move into this digitized world that I'm wondering what role Robinhood has. Like, what are you able to do if you don't have buy-in from all the other infrastructure partners when it comes to, let's say, settling a stock trade? Like, what can you do at Robinhood without their input?
Yeah, there's still a lot of things we can do, and I think we're still on day one, to be honest. Like, in the next few years, I think if you don't want to be left behind, you will have to get into this world of tokenization and blockchain technology. But overall, what we're looking for is being able to give more access to our customer, not just US stocks, but also other exchanges in the world, and also other type of asset, private equity, real estate, arts, everything can be tokenized. And the reality is that right now you see a lot of these companies that were not really moving on tokenization, actually embracing it. There are news almost every day now about a big hedge fund or a big exchange starting to use tokenization. So our role is going to be to remove all the complexity, abstract all the technology, like the wallet, private key, all this kind of thing, gas fees with the blockchain, and make it easy to use for the customer and give them new opportunities to use these stock tokens basically on chain, which will give them more features, more ways to get yield and etc.
At least in the U.S., where's the friction? Where do you see some, not resistance, but some slowdown in terms of full adoption, full tokenization?
Yeah, there is a bit of the regulatory uncertainty still.
But in terms of the participants?
I don't think anyone is really pushing back. I think at this point, everyone is really excited about it. But what you're going to see is also how do we bring all this technology on chain? There's still a lot of old software being used on different platforms, and so we will have to bring that on chain at some point.
You oversee crypto, you're general manager of crypto at RobinHood and SVP. I'm wondering about prediction markets because we know that Vlad Tenev has been so outspoken about what he thinks is a new asset class. What does the sort of Venn diagram look like with participants on Robinhood's platform who play in the crypto space but are also dabbling in prediction markets on your platform?
Yeah, we actually don't see cannibalization or anything like that. So we see customer being really excited to be able to trade all these type of assets on the same platform.
So the same customers one customer is doing everything essentially.
We see some customer doing everything. We see some new customer just for prediction market, and we see some people are still just doing crypto. But I think prediction market is also a new way to invest for a lot of people, being able to invest in a particular event or in a particular situation that you could not really do necessarily with just stocks or just options or just crypto. So it's just giving a new way for people to participate in the market.
I'm interested in the fact that you use the word invest. Prediction market, do people invest when it comes to prediction markets, or did they just participate? It's more engagement than anything else, isn't it?
I think you have investment as well. Like for example, something I like to explain is AI. If you want to invest into AI and you want to really think about the future, you have a few ways of doing it. You can pick a stock, AMD, Google, or something like this, and you have chances that it's not going to turn correctly because maybe they missed a quarter or maybe they missed a delivery. But with prediction market, we have contracts around AI, which model is going to be the best model, for example. And that, I think, gives an easier way for people to enter the market and having a hedge against the situation.
I saw somebody complain on social media earlier this week about that they had to scroll past prediction markets in their Robinhood account to get to their retirement account, just to look at it. And they were essentially saying that the juxtaposition of what they saw as gambling doesn't really match how they view investing. How do you solve for that from like a market positioning standpoint?
Yeah, there's a few things. One, you can actually turn it off in the settings of your app. So if you don't want to see the prediction market, you can actually remove it. But I think for us, it's going to be about personalization. We need to invest a bit more into what are people excited about and making sure that we can surface it to them. We have this issue of being this super app at this point where we have all these type of assets, not just equities, cryptos as well. We also now have a banking app. And so, it's going to be important for us to make sure that we show you what you're actually caring about.
What's your number one priority for 2026, Johann?
We spend a lot of time on institution. We have an exchange now called Bitstamp that we acquired last year. And for us, it's really important to make sure that the technology that we've built, everyone can build it. So we have this white label solution that we are implementing in a lot of places now.
Johann, good to see you.
Great to see you.
Thanks for stopping by, joining us in person. Johann Kerbrat, Senior Vice President and General Manager of Crypto over at RobinHood. Bloomberg Crypto continues in just a few minutes. We've got an exclusive interview with Morgan Stanley's new head of digital asset strategy. That's coming up in just a few minutes. This is Bloomberg.
This is Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stanovic.
It's time now for Money Rewired. It's the increasing overlap between crypto and traditional finance. Morgan Stanley recently applied for a charter to allow it to custody digital assets. Joining us now in an exclusive interview is Amy Oldenburg, head of digital asset strategy at Morgan Stanley. It's her first TV interview since taking on that role in January. She's at the Digital Asset Summit here in New York. Amy, congratulations on the new role. Thanks for joining us on this. I think a lot of people might be watching, listening right now, thinking, wait a second, why does this established bank that's been a bank for so many years need to actually apply for a new type of license to potentially custody digital assets? Can you explain that?
Tim, Scarlett, so good to see you, and thanks so much for having me on the show today. It's a great question. You know, it's a continued extension of everything that we're already doing at the firm around innovation. When it comes to the OCC charter, it really is trying to understand how we operate as an organization under the current regulatory environment, how we make sure we're operating both with the traditional assets that we need to manage and the new digital assets, which in many cases may require different entities just to make sure that we're keeping things segregated. But it could all change. We're seeing different regulatory outputs every single week. So we're trying to keep pace with all the changes and making sure that we pivot as those things continue to evolve.
What drove the decision for this application? Was it sort of a top-down, like, hey, we see what's happening in the ecosystem and this is something we need to do? Or were you hearing from different clients who said, this is what we want from you as our bank that we've used for generations? Where did you sort of get the motivation from?
It's coming from both directions, and this isn't something new for us. We've been working in terms of the DLT, blockchain, digital asset infrastructure for many years. The regulatory environment that changed back in 2025 really put us in a position to accelerate that momentum, and we're doing that across all divisions of the firm. So I think that's the one thing that's most exciting right now. It's not just turning on one new product. It really is understanding how this changes every business that we're in and continuing to find the new revenue lines and the new opportunities for us to continue to build.
And I know a lot of it is perhaps out of your control, given that it's an application for a license, but I'm curious in terms of timeline, how you see this shaking out. Is this something that's going to be executed in 2026 or down the line?
That's a great question. So we've done a lot of exploration up until this point, and I would say 2026 is continued exploration, but really where the rubber hits the road on the execution. So the team's been working very hard across all the divisions to get some of our initiatives set up. We've talked about crypto trading on the E-Trade side, even on the institutional security side. The one thing that we wanted to talk about today is turning on our dark pools, so our trajectory cross to support tokenized equities by the end of 2026. So this is happening this year. There's a lot of activity in all divisions, and we'll continue to power through 26 and then more to come in 27.
Okay, so that gives us a sense of what's on the table here for the rest of this year. Last week, I noticed that Morgan Stanley filed for a Bitcoin ETF under the ticker MSBT. And if approved, Morgan Stanley would then become the first major U.S. bank to directly issue and sponsor your own spot Bitcoin ETF. Why do this now? There's a whole suite of spot Bitcoin ETFs. What does having your own spot Bitcoin ETF allow you?
I have to keep something for the following weeks. I don't want to talk too much about it until that finally becomes effective. But I think you'll see some of the reasons that we're doing that as that goes live. And I think there's still a lot to do in terms of the ETP side. We're still seeing most of that activity coming through the self-directed business on the wealth channel, and many other intermediary platforms, even beyond the wealth platform that we manage, does continue to need to bring more of those products to market. So there's definitely more we can do here.
So what does the current data from the bank show about crypto adoption by demand right now? So sort of like by clients who are interested in this. I'm just curious where the demand is coming from, because it's been so volatile, especially over the last few months. And I'm just wondering what you're hearing from Morgan Stanley clients.
So this is a really interesting space for the traditional finance firms. One of the things we're seeing is not only just exposure to Bitcoin, but it's also many long-term spot Bitcoin holders or other crypto holders looking to move some of those assets into the traditional finance space so we can offer them other services around their exposure and that wealth that they've created in the traditional in the crypto channel. So I think that's one thing we're really seeing this come together. One of the things that we've seen the SEC do is to allow in-kind transfers into ETPs. So I think you'll see more of that, where you see Bitcoin holders or other cryptocurrency holders move their assets into ETPs, and we're able to offer them other services around that, really bringing these two worlds together.
I know you said you want to kind of hold some stuff for the next few weeks when we have you back, Amy, but I got to ask, last fall, Jed Finn, who's the head of wealth management at Morgan Stanley, said the bank was evaluating broader uses for tokenization. Can you update us on thinking there and sort of like how that thinking has evolved in just a few months?
You know, I would say the thinking has evolved to the point that we're looking at every asset class we have. If it's equities, if it's bonds, structured notes, privates, where does that tokenization infrastructure, and this is really where learning what that technology does and how we can create more efficient markets for our clients and a better client experience. So that's all coming together, and I think we're really looking at every asset class across the board to see where we can leverage that.
What is the asset class that comes first, though, in terms of where you would move quickly?
So I think we're a bit surprised to see there's been this flip-flop over the last few years. We started in privates, it's moved back over to equity, it's coming back to privates a little bit. You know, I think it's balancing out. We've already been actively involved in the tokenization of equities. We participated in the tokenization of the figure secondary a few weeks ago. So that's live and that's happening within our institutional securities business. So I can already tell you we're off and running on that. I think you'll see us hit the ground with some other projects, hitting some of the other asset classes later this year in 26.
All right, thank you so much, Amy. Really appreciate your joining us today. Amy Oldenburg is head of digital asset strategy over at Morgan Stanley, and we hope she'll be joining us again in the coming months to keep us up to date on what Morgan Stanley is doing there. Now, coming up next on Bloomberg Crypto, you may have noticed Ledger's logo on the front of the San Antonio Spurs Victor Wembanyama's jersey. It's another example of crypto going mainstream. We're going to talk to Ledger's CEO next about the company's latest news and potential plans to go public. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are mixed and oil is climbing as traders continue to grapple with the conflict in the Middle East. Israeli officials say the country will continue with strikes against Iran, even as President Donald Trump claims talks are underway to end the conflict. Also, according to a post by Iran's military on X, a container ship was turned back for lacking permission to transit the Strait of Hormuz. Turning to corporate news, Estee Lauder is falling to its lowest level since June after the company said it's in talks to buy Puig brands in a deal that would create a cosmetics giant with about $20 billion in annual sales. Meanwhile, Janus Henderson shares are climbing after Tryon Fund and General Catalyst raised their bid to buy the asset manager to $52 a share in cash. This offer is a $43 increase from their last bid. Janus Henderson's board has backed this revised deal and is urging shareholders to approve it. And finally, shares of Jefferies are higher after a Japanese bank said it has no immediate plan to take over the company. Execs say they're conscious of the various regulatory obstacles with a potential takeover of Jefferies. Those are your midday movers. I'm Nora Melinda.
All right, Paris-based digital asset firm Ledger has completed a $50 million secondary share sale. We wanted to bring in the CEO, Pascal Gauthier, and talk about the company's plans because just yesterday, Pascal, you opened a new office right here in New York City. Congratulations, by the way. And this marks a significant expansion into your largest global market. Just start us off by explaining why you need to be in New York City right now.
Right. So thank you for having me today. First, we opened the office, but we also announced John Andrews as our new CFO. And it's a sign of maturity for the company. And why New York is because New York is the epicenter, is the financial epicenter of two mega trends, which is the cryptocurrency trend as new rails to transfer value, and this AI trend as ways with agents to also move value. And Ledger being at the intersection of these two trends, we provide security and control for this future of finance that we bring to financial institutions. So this is why we come to New York.
You mentioned John Andrews, so we got to go there. You told our colleague Anna Herrera of Bloomberg News that you really have no plans right now to go public. You could be a private company forever, is essentially the gist of what you said. But John Andrews is a guy you hire to take your company public. I mean, he took Circle public. He's got so much experience in capital markets. He was part of Goldman's IPO. He's capital markets experience at Citigroup and Deutsche Bank. This seems like someone you hire if you're going to IPO.
Well, you know, always be raising is my job, so Ledger will be raising. Whether it's going to be an IPO or a private round, you know, who knows. Right now, we're well-funded, we're profitable, we're growing organically, but you need the best to build the best company, and so John is one of the best. His appointment has been acclaimed by NYC and NASDAQ yesterday, which is not a small thing, and so I need the best in my team to build the best possible company.
Probably because the NYSE and NASDAQ want your business if you go public here.
Yeah, of course.
Would you go public in the U.S.?
Everybody wants Ledger Business, which is great, and it's testimony that the company is doing great. And going public in the US, yes, it's a strong consideration if you want to go public as a company, because US has the best investors, and also US being our #1 market, this is why we sponsor the Spurs. You know, we want to do great here. And since the future of finance is decided in New York, you know, all roads leads to Rome, and now all roads leads to New York, which is the new Rome. So that's why we're here, but we're not announcing any IPO. We're just preparing the company to be the best possible.
You mentioned the sponsorship of the Spurs, so let's go there. What has that brought you tangibly in terms of actual benefits? What's the name recognition like now among the group that you want to reach because of the sponsorship that you didn't have before?
It's a great question. So, you know, as you know, crypto markets are quite cyclical. And so the idea is that how do you decorate yourself from the cycle? And how do you make sure that you stay top of mind to your consumer base, whether it's the pure consumer base or financial institutions, whether the market is high or low. And so the Spurs is a way to hack your growth in terms of top of mind. And what we've seen with the Spurs sponsorship is that brand recognition is actually as high with the Spurs when the market is low as it was high when the market was high. And so actually, the Spurs actually help us to be counter-cyclical. And why? Because they win. They win so many games, and so you see the logo of Ledger everywhere. And we've aligned with the Spurs in terms of our values. This is why also the partnership is so strong and has done so much for us.
So on that, and the U.S. being such an important market for you, it seems like in the last year, it's fair to say with this new administration, that it's become a much more friendly environment for companies that are crypto companies and also crypto adjacent companies. Would you ever consider leaving France and headquartering here in the U.S. under this new regime?
Well, it's true that the new regime in the U.S. is very favorable. The French regime is also favorable. We have no plan of leaving France. You know, Ledger is an international company, and so we play with the best cards that we have everywhere that we are. Being in France is not a problem for us at all. And coming to New York is a must-do for us. So having the best of both worlds, I guess.
You know, your product that you're most well known for is this hardware, and you've recently upgraded the version of this app-based wallet ledger. And so I'm just curious what demand looks like for this particular product right now, as Bitcoin, at least at the start of the Iran war, looked like it would be kind of a haven. It's given way a little bit with risky assets, but it's become a real go-to place for investors who perhaps don't have the faith in traditional assets. And I'm wondering what demand looks like for your product with all this confusion, with all this volatility in the marketplace.
Well, the demand is still very strong. I mean, we had a record year last year. This year, we have a very strong start. We are now not just a hardware company, we are a solution company. And so with hardware, we also now sell software. I told your colleague Anna that 50% of our revenues now come from software. Wow. And so hardware and software are combined into providing a service to our customers, whether it's consumer or enterprise.
Pascal, forgive me, it's in the news, so I got to bring this up, but Decrypt reporting that a suspect has been arrested in the alleged role in kidnapping of David Ballin, the co-founder of the company, and his wife last year. The story cited data from the security firm Certic that said physical attacks for the purpose of getting crypto are up 75% year over year. On Scarlett's question, the idea of self-custody versus third-party custody. So self-custody, what Ledger offers. How do you think about that when it comes to physical safety versus actually storing one's crypto with someone else? Which one's safer?
I think Ledger offers the ability to have digital private property. You know, I think it's better to frame it this way. Because the question is, do you like to own stuff, and is it important that you can own your stuff? And I think private property is very important for freedom. If you take away the possibility for private property, you take away some of our fundamental freedoms. With private property comes, the need for security and the need for you to worry about your security. And so there's no perfect world in terms of security. It's not because you trust your asset to someone else that these assets are not going to end up being stolen, FTX. It's not because you keep your assets yourself that it's the best possible way of being safe. And so whatever you do, you need to worry about your security. And if your security, you're better off leaving your assets somewhere else. It also has some risk if you prefer to keep some, etc. But the point being, being able to hold yourself, your digital property, is actually something that is very important for the future, because if you hold nothing, then you have no freedom.
Pascal Gauthier, that's a great place to leave it. He is chairman and CEO of Ledger, based in Paris, but of course they now have an office right here in New York. Thank you so much. Coming up next on Bloomberg Crypto, betting big on the big dance. It's another record-breaking week for Kalshi as it rides a March Madness wave despite the NCAA's resistance. We talk prediction markets next. This is Bloomberg Crypto.
Let's get to the odds. It's an in-depth look at the booming growth of prediction markets. After Arizona last week filed criminal charges against Kalshi for operating an illegal gambling business, I spoke exclusively with Kalshi co-founder Tariq Mansour. He vowed to fight the charges.
The Arizona Attorney General decided to subvert the judicial process and weaponize it and go to state court and file these criminal charges, which we view as meritless and baseless. We see this as a total overstep. And we look forward to fighting it in court. This is the whole point of federal preemption. So this is not about gambling. The charges that the Attorney General filed are not about gambling. They're not even about sports only. They're about prediction markets writ large. It's just, attacking the entire business model. I always say this, whether something feels and looks like gambling doesn't necessarily make it gambling. Speculation exists in all financial markets.
Meanwhile, some lawmakers at the national level are also taking aim at prediction markets. A new bipartisan bill introduced in the U.S. Senate seeks to ban prediction markets from allowing transactions that mimic sports betting. It's called, quote, the Prediction Markets Are Gambling Act. Kalshi's co-founder shared his thoughts about that legislation on X. He said, quote, casino lobby hard at work. Banning just pushes this offshore where no regulation exists. This bill isn't about protecting consumers. It's about protecting monopolies, end quote. Bloomberg's Lydia Bayou covers financial regulation in Washington. She's been following these stories and more. She joins us now from our D.C. bureau. Lydia, I'm wondering how this plays out. Is this ultimately just headed for the Supreme Court, and that's where we see real clarity on this fight?
For sure, this is almost certainly headed to the Supreme Court because of the number of cases that we're seeing. I think it's around a dozen so far across so many states. As well as there are Indian tribes who have also brought litigation against some of these prediction market platforms. And we're seeing sort of disparate or disagreeing rulings coming out of courts now. So all those factors kind of lead toward us thinking it's going to go to the high court sooner than later.
Okay, so that'll be kind of the deciding factor in how this moves forward. But in the meantime, you've also written a story, Lydia, this week about how Kalshi and Polymarket's founders have backed a new prediction market.
Wait, they're
VC
coming
fund.
together, these two?
And I guess that's a question. It kind of boggles the mind that they would join forces like this.
I think that's been a lot of people's initial reaction. And this particular fund, this new VC fund that you're talking about, it's called 5cc Capital, and it's focused on the prediction markets space, looking at infrastructure, looking at data aggregators, kind of like these secondary and tertiary players that are going to help build this industry. And I think that speaks to why they were able to attract funding from the CEOs of both Polymarket and Kalshi, as well as, there's a long list of kind of TradFi, crypto folks, prediction market folks who've also backed this fund.
We want to get your take on what these platforms also are doing when it comes to insider trading or alleged insider trading. Just yesterday, we heard a slew of announcements about Polymarket and Kalshi taking on insider trading as scrutiny grows. The announcements from these companies in the last few days, does it actually prevent it from happening? Does it tackle the idea or the concern about an appearance of conflict of interest with certain things? Are they able to do this?
I think it's going to depend on how robust their kind of KYC, their know your customer parameters are. I mean, they've told us for many years, that they have to meet the CFTC, their regulators' requirements for doing that, at least for the CFTC regulated exchanges. What I thought was interesting in the news yesterday was that Polymarket International, which is not regulated by the CFTC, is kind of trying to take on the same sort of like robust metrics for keeping people out of contracts that they might have insider knowledge on. And so I thought that was the biggest development of all of those things. But for sure, all these companies, and not just those two, all these companies in the prediction market space are under intense scrutiny right now in Washington, and from traders themselves who are worried about people being on there who have an unfair edge.
All right. Lydia, thank you so much. Lydia Bayud covers financial regulation for us in Washington, and she's certainly been writing a lot about prediction markets, which, if nothing else, have attracted the attention of regulators.
And my attention, too. I mean, this is like, the overlap with crypto is big, but it seems like, like with RobinHood, they're considering this a new asset class. Everybody can't get enough of prediction markets.
No, they're advertising everywhere as well on top of all that. That does it for Bloomberg Crypto this week. Join us again, same time, same place next week. This is Bloomberg.